Welcome to Megatrade101.com, part 1 of a series of chronicles trading in the foreign exchange market. The recent positive report on the GDP was the much-needed fundamental fuel that triggered a substantial movement higher for the US dollar and had the direct effect amongst the major pairs as shown here on the charts. Here we have 4 comparative daily charts of the New Zealand dollar, the Australian dollar, the Japanese yen, and the Swiss francs. For starters, when the US dollar index penetrated 78.80 basis points resistance price levels after the report, plus the weak economic numbers coming from UK also supported the US dollar and affected both the British pound and the euro negatively as a result. With the direct correlations and effects of the Aussie that drove prices lower, which is at 0.8845 now. From a high price of 0.9332 last November of 2009, and on January 14 at 0.9328 was the turning point where, as you can see here, which I'm circling, that looks more of a spike formation on the high side. Which was actually the signal for a down movement on a candlestick configuration. In spite of the signal, we still waited for a few more days before we initiated a selling position for the Australian dollar, priced at 0.9016. Where currently it is working at 0.8845, making us at least about 171 pips for our position currently. It will try to attempt 0.8750 approximately in this area, which is the previous low from December 23rd of 2009. A possible spillover for next week would be attempted at that price levels. The same scenario occurred when we also sold on the same day, on the 28th of January, for the Kiwi, or rather the New Zealand dollar, priced at 0.7118 and is currently working at 0.7013, making a considerable 105 pips floating profit at this time. As you may also see that the New Zealand dollar and the Australian dollar's movement are in line with each other. Now let's move to the Swiss francs, comparing it with the dollar yen. As you can well see that the trend following of the dollar Swiss and the dollar yen are totally contradicting each other. Instead of adding more positions to the previous New Zealand dollar and Australian dollar, it was relatively correct for us to choose the dollar Swiss to take a position to buy at the price level of 1.0515 and currently working at 1.0604 with an 89 pips profit currently. With the help of the Swiss National Bank's intervention in the market, which happens every now so often, plus the dollar's movement has supported a good fundamental reason to buy the dollar Swiss at this point. It would not have been wise for us to choose the dollar yen to buy a position. That's why we just left it open and had 3 existing positions currently. So now we would like to show you as such that on the 28th of January we bought the dollar Swiss at 1.0515. On the same day sold, which was the prior 2 positions of the Australian dollar at 0.9016, and as well as the New Zealand dollar at 0.7118. We are still expecting the dollar to move higher, and a spillover would be done for next week. It will be quite difficult for us not to be able to take these positions and leave it open on the weekend, simply because the strong sentiments for the dollar to move higher is still there. This strategies has worked more often than not, as long as due diligence, proper research, and studies are done prior to trading. So spread trading and proper funds allocations should always be exercised as a precautionary measure while trading the foreign exchange market. It does not happen all the time, as no guarantees that you will have the same trading results on this presentation. Please choose wisely, as there is risks involved in trading the foreign exchange market. Thank you and have a good day.